right. Welcome to our DFW Market of the Moment update. This is the week of April 13th, 2023. Welcome, Chris Madrid. What's up? What's up?
What is up, man? Good to be back.
Good to be back. Good to be back. I was checking today. I think it's been just about a month since we've done a market report. So, as far as when we get into the real estate stats, the housing numbers, going county by county, that's going to be the comparison will be based on like a month ago. So we'll kind of be able to see, how the market's changed over that month. It definitely has. Got some personal stories to tell about it, which I'm sure you will too as we get into it. But anyway, man, happy spring, and let's get this thing rolling.
Absolutely. Yeah. So, I mean, a couple of things we can wait before we go to that one. A couple of just quick updates that I wanted to jump into. We can leave that there from a national market perspective, right? So for spending, so national market update, spending on residential lending or residential construction rather, in February slipped a tad. So from January to February, it was down like 0.5% below January's numbers. Still coming in strong from a national perspective at 852.1 million annual rate. However, right, one of the caveats there is that spending is still around 5% below last year, and of course that's mainly because a lot of the builders, right, from a construction component, they're taking into account the higher interest rates and how that impacts affordability, like we've talked about, and then ultimately, people that purchase they're only buying so much based on affordability. So of course spending is going to be down a little bit. Nothing to worry about there. Black Knight reports a February monthly gain in home prices after 7 months of declines. So that's great news. Which again, you're going to go into some of that. We talked about. So we started doing this. I don't know, a year and a half ago. It seems like. And for a while there, we just saw, home prices slip. And we are now at the point where we're up, right? So we're up now. 2%, I believe, is the gain that we're seeing, or maybe it's like 1.94 in February.
Yeah, it's about what we're going to see when we get into the numbers.
So we'll be going into that. So that's great news. Freddie Mac's chief economist observed that mortgage rates continue to trend down entering the traditional spring home buying season, though there's still low inventory of homes, which we're going to touch on, specifically for first-time home buyers. So that's just kind of a national market update that I always like to provide, just to give an idea of where things are at currently. So if you're buying right now, a 30-year fixed mortgage is going to be somewhere in the 6.5% range, with a 6.4 maybe, which means that your base rate is still high sixes. So 6.8, 6.9, we're down from where we were probably a month ago, right? Over 7.25, 7.3 in some instances. We're now down. So you're looking 6.4 to probably about 6.8 is where you're at on the 30-year fixed. FHA and VA though are still in the low 6 range. So 6% up to about 6.4, 6.5 on FHA and VA. So all great news for mortgage rates. I feel like we've been kind of on that train that, hey, rates will be coming down once the inflation numbers get in line. So those are some of the things that we'll jump on next.
All right.
So PPI, which is the producer price index, came out today.
So what we want to look at this?
Yeah, we can go to that first slide.
All right. Oops.
Yeah, so the March Producer Price Index report showed that overall producer inflation decreased by 0.5, which was much cooler than the flat reading expected. So that's good information for the bond markets, which oftentimes mortgage rates, bonds, inflation, those are all, like we've been talking, those are all one. It almost seems like they're one mechanism, but they obviously work differently, but are tied together. So anytime, like we've seen over the last, it seems like almost a year, but maybe it's been, 7 or 8 months, that inflation has really crept up, right? We're seeing, in this chart here, that the PPI almost got up to 11.5, I think was that where we see that red peak on that right side of January through, I think that's January of 2022 through like summer of 2022. I think it peaked out at 11.5%. So we're down. I mean, we're down significantly to about 2.5. I think it's like 2.5 to 3% right now. So again, inflation peaked, right, and is now moving downward. The big things that we're kind of hearing and reading about are whether or not the Fed is going to slow down on their increase of the federal funds rate, right? I mean, they've projected that. I think there's like a 70% 70% chance that they'll be hiking rates again in May. So I mean, no one expects it to be 0.5 or 0.75. It may end up being like a quarter if they do anything at all. I mean, the tough part that we're seeing right now is that like we've been kind of saying, the Fed has, it's almost like they want to slow down, overcorrect essentially, right? They're wanting to push the economy into inflation, and if they keep hiking, they've already said that the minutes came out also this week from the Fed's meeting, and a couple of the Fed presidents had mentioned like, hey, we're probably gonna have to start cutting the federal funds rate. So it's almost one of those things like, okay, if you need to cut it, why are we even going to go up, right, in May? So there's another very important the CPI report that comes out in May is going to be another I think impactful inflationary report that comes out. So hopefully I feel like if they see that come out early May when they meet, they may not increase it, but man, at the end of the day, these guys just don't learn from they don't use the rearview mirror at all, right? They're just looking ahead. So we'll ultimately it just depends on what the Fed does. But going to the charts, the mortgage-backed securities market was looking up. I think we got to it. Well, when I had sent this over to you a couple hours ago, we'd got over 101, and I think as it stands right now, we are at like 100.94. So there's a lot of, today's been a super interesting day watching the market. No massive increases, right? But we're seeing, 10, 15, 20 basis point swings on mortgage-backed securities market. So, again, as we see, this is a 3-month picture, right? So we saw the MBS got up to the beginning of February, pushed up, and that was like 1 or 2 days over 101, over 101 and a half, and then has significantly just come back down since then. So that so rates kind of bottomed out, we can say, right, at the beginning of February, and they've slowly crept up into the early part of March, and then now into the early parts, middle of April, we're starting to see a little bit of a rebound. And just in the last month and a half or so, I mean, that's from a rate perspective, I mean, that's a 0.5% to 0.75% swing from kind of where they had kind of peaked at the early parts of March. So again, it's not going to, rates are coming down. It's not going to be in a straight line. Like I feel like that is the message that we've been preaching for such a long time, but they are, as inflation continues to come down, mortgage rates will continue to come down with it. And that's great, right? That's great from an affordability perspective, where we still see a concern, right? And like as you and I are talking to buyers, whether they're buying now or buying later, the biggest impact that lower rates are going to have is on inventory, right? We can't like preach that enough.
Getting ready to see that.
And you're going to talk about that. But yes, overall things are a little bit better. I feel like they're going to continue to get better. But the inventory component is what's still a challenge. Yeah, and will remain to be a challenge, right?
All right. Well, is that all you have for us today?
That's all I got.
That is
all I got.
What we're going to do now is take what you just said, and we're going to look at the numbers throughout the DFW market and see that basically everything you've said is kind of ringing true as far as prices, inventory, days on market, all of those things are showing that the market is bouncing back in most counties around DFW. So let's get into real estate trends. These numbers pretty much hot off the press. So this is going to give us a very good idea of what's happening in the DFW market at this particular moment. So if we jump in and we look at Collin County and our averages in Collin County, we're looking at 96% or just about 4% under list price. And as Chris was talking about earlier, home values have been going up first time in many, many months. So in Collin County, over about the last month since we did our last update, we're looking at home values rising about 2.5%. Days on market have dropped 15 days down to 24 days on market. And our supply and our inventory is down to 1.7 months, which is a drop of about 0.3 of a month supply. New listings were at 324 versus 191 back in February when we last did an update. Solds were at 339 versus 246. And Denton County always trends very close to Collin County, and list price, sales price to list price was 95.9%, or about 4.1% below list. That is a 2% increase over about the last month and a half. Days on market dropped 9 days to 28, and the month supply also dropped 0.3 of a month in Denton County down to 1.8 month supply. Let's try to remember that a 4 to 6 month supply of inventory is what's considered a healthy real estate market. Looking in Dallas County's actually sales price to list price is the highest in the Metroplex right now, getting 96.5% of the ask price, which is an increase of 1.8% over the last about a month and a half. Days on market once again dropped here, as in Collin and Denton counties, dropping down to 18 days on market, which is a 10-day drop. The month supply remained the same because it really can't get much lower than this, but 1.8 month supply in Dallas County remained the same over the last about a month and a half. New listings was 468, which is up tremendously from what we had going on in mid-February, and solds are 465, trending very, very much the same, nearly double what was going on a month and a half ago. Remember, a lot of these numbers are based on what's happening with our interest rates, how when interest rates drop, these market trends seem to move in what would be the seller's favor most likely. And in Grayson County, our rural county to the north, you're getting about 93.5% of your list price. That is still an increase of about 1.5% home values in Grayson County. Days on market, 46, which is actually 5 days more than previously reported. And then we have a 3.1 month supply, which still dropped in Grayson County. If we look at our surrounding counties around the Metroplex, Tarrant County, Fort Worth at 96% or 4% below list, which is a 2.1% increase over our last update. Days on market 25, which is down 9 days, and they also are carrying a 1.8 month supply, which dropped 0.2 of a month. Tarrant County, much like Dallas County, you've got a lot of different price points and generally more listings and more solds. So new listings were 513 last week in Tarrant County versus 466 being sold and going off the market. Rockwall County, just east of Dallas, 93.5% of list, just about 6.5% below. That remained the same compared to about a month and a half ago. Days on market actually increased in Rockwall County, and their month supply did drop. It was up over 3%, or 3 month supply. It's dropped to under 3 months supply in the last month and a half. Trying to explain some of these Rockwall numbers. I do know there's a lot of building going on in Rockwall County, new construction. So some of these things affect this day on market and list price staying about the same and those things. We go to our rural county west of Fort Worth, Parker County, Weatherford, Texas, Brock, Mineral Wells. No, not Mineral Wells. Weatherford mainly, 95.6% or 4.4% below list. That is up 1.2% in the last month and a half. Days on market is 53, staying about the same. And they have the same 4-month supply as a month and a half ago. So just to sum up, as Chris was saying, if we are to, once we look at our numbers, we can very easily tell that interest rates have a direct bearing on what's going on in our real estate market right now. As those rates tick down, inventory is going to tick down, home values are most likely going to rise. So something for you to remember as a buyer, the competition is only going to get stronger as those interest rates stabilize. People, I think, now are understanding that a 6 is a pretty good interest rate. And so when they're in the 6s, I think people are going to get out, buy. And if they get down into the 5s, it's most likely going to return to multiple offer situations and definitely swing back into that seller's favor. So speaking of selling, I wanted to jump in and talk real quick about, if you did want to, if you want to sell your house this spring, it's very important to price it right. Amy and I have had several listings on the market in this last month. Felt very confident about the pricing due to the fact that all 3 of them had over ask offers within the 2 in the first weekend, the other one in the second weekend, but all 3 over ask and basically within 10 days of going on the market. So I am a firm believer that if you want to sell your house, you need to price it right. I want to go over some of the reasons why that is so important. So important. First of all, over the last year, the housing market's gone through a significant change. It is still a seller's market, but it's not a market to where if your home's not priced right, it's still going to sell. It's homes that are priced right are selling right now, and they get the most attention from the buyers. When I'm pulling comps and looking at days on market, it's crazy to see that some houses went off the market in a couple of days, and some houses have been on the market for well over 50. And I personally think if you're in Collin County, Denton County, if you have your home priced right, it should not be on the market more than probably 25, most likely 20, 25 days. So if you're thinking of selling your house this spring, it's very important to lean on an expert like myself, an advisor when it comes to setting your list price. You don't want to surf through Zillow and see what's sold and what those estimates are and come up with your price this way. Realtor.com basically explains that move-in ready homes with curb appeal in desirable areas and that are priced to sell are especially likely to move quickly this spring. And like I said, I can attest to this statement because the 3 listings we had they were move-in ready, they had great curb appeal, and they are in desirable areas and school districts here in the Metroplex. And by pricing them right, we were able to get multiple offers and offers over list price with quick close dates, which is the real estate advisor's job, to get you the most money and close it as quickly and painlessly as possible. So in today's market, how you price your house, is not only going to make a big difference to your bottom line, but how quickly will your house sell? Like I said, I'm seeing some houses go off the market in 2 to 3 days over a weekend, and I'm seeing some that are out there in the same neighborhoods that are on the market for well over 50 days. So I wanted to talk about why pricing your house right matters, why pricing it correctly from the get-go, from the start, is so very important. If you price it too low, you're basically, potential buyers see the property as it might already have some issues, or why are you pricing it at this when everything else in the neighborhood is priced a little higher? Um, or if you do sell at that low dollar amount, you as the seller probably left some money on the table, which you never want to do with what is your probably one of your biggest investments you've made. You want to maximize what you get out of that investment. If you don't get as much as possible, then that's going to affect your buying power at the new place that you're trying to get. On the flip side, if you price it too high, you could also deter potential buyers, or you're going to price some buyers completely out of even viewing your home because it's not in their price range and things of that nature, when it actually probably should be in their price range. Whenever you start doing price reductions, which you're going to have to do if you don't have an offer in 10 days, or if you haven't had 10 showings in 10 days, chances are your home is priced too high. And then what that leaves you to do is, after those 10 days and you don't have an offer, or you haven't had those 10 showings, then you have to do a price reduction, or you need to do a price reduction. And when you do that, it sends up the first red flag of what could possibly be wrong with this property. In this market, why are they dropping the price? Are they hard to deal with? Will they not do any repairs? So lots of many things go into the buyer's mind when they see these reductions. Plus, they also feel like they might have you leveraged to where they can even offer possibly a little less. So it's so very important to price your home correctly the day it goes on the market to get as much interest as possible in those first 10 days. So when you price your home correctly from the start, you avoid both of these headaches, and you can avoid them, which is very important. You want to make this as painless, as seamless process as possible. So having a real estate professional like myself, I know how to determine the ideal asking price for your property by pulling comps around your neighborhood, in your zip code, in the school district you're in, pulling them several different ways and crunching the numbers several different ways. I can balance the value of the homes in your neighborhood. I look at the current trends and the buyer demand, the condition of your house, and even a few other things. And then that's how I determined what the right price is to list your house at. Not necessarily what I think it's going to bring, but where we should price it to get the most buyers and get you the best terms possible. And what this does, it helps lead to stronger offers and a greater likelihood that your house will sell quickly. It's not my job as a listing agent just to put a sign in the yard and get it up on the MLS. It's my job to drive the buyers to your property and then help you determine which one of these offers has the best likelihood to close, has the best terms for you, to make your life and your move as simple as possible. So if we take a quick look at this chart of underpricing, overpricing, and pricing it properly, we can see what some of the potential pitfalls might be. So if we're underpriced, first of all, most likely we're going to lose value. It decreases your future buying power as you move on to that next property. And it also deters skeptical buyers that, there's something wrong with this property. If we overprice the property, it's going to sit on the market longer, which is going to go back to deterring skeptical buyers. Price drops can send the wrong message to buyers. It sends messages that possibly you're not easy to work with. Maybe you're not willing to drop your price. Maybe your agent had to talk you into dropping it. And then if you overprice it, you just price out potential buyers, a big segment. And depending on the price point of the real estate market you're in, you could price out a lot more people just by going, 10,000 over a certain price point. what the value of marketing it and pricing your home at the market value. It's going to attract more buyers. You're going to ultimately get a higher sales price, and most likely you're going to get a faster sale because you're not going to be reducing the price, making these adjustments, sending out red flags to potential buyers that then won't look at it, and those types of things. So this chart gives you some very good reasons to price your home properly. So if you are thinking about selling your home this year, let's definitely connect so that you have an expert's advice on what's happening in the housing market and what that means for you and your home ownership goals. You can get a hold of Amy and I at 469-369-0873, and we will certainly get you on the path to home ownership, selling one home and getting you into the next one, whether that's downsizing, upsizing, whatever that case may be. All right, there's a ton of real estate news floating around out there. Chris and I try to bring you the most up-to-date information, the most accurate and correct information as we are going through the market on a daily basis. So if you want the real scoop, get in touch with myself or Chris so you can understand the market of the moment. All right, Chris, you got anything to add today?
No, man, a lot of good information. Yeah, I cannot stress the urgency of, again, if you were wondering whether or not you could purchase and qualify, finding out whether or not you can right now, because I feel like, again, as interest rates improve, we're going to be back in the same position that we were last year, where multiple offers, like we're already starting to see them, right, at when mortgage rates are in the mid sixes.
Exactly.
So yeah, get while the getting's good, because again, it's not like you won't be able to buy. It's just gonna be more difficult and more expensive.
Definitely.
Right? So
we'll get that home buying process started. Reach out to Chris Madrid at 214-734-1531. After he gets you pre-qualified, the Oldham team will get you out. We will find and win the home of your dreams. So, all right, Chris, have a great weekend. We'll see you next week. Be safe out there, and we'll see everybody later. Peace out.
Yep. See y'all later.
All right, man. I'll go back and redo my stuff, and then I'll cut it all together.
Sweet. So are you getting this recording error message on your side or no?
No.
Oh, okay. It's like you're running out of storage space on this device, but I don't know if that means me or.
Well, it somehow, I think, like for you, it records your stuff, so you could pull it, just your audio and your video, I think.
Oh, okay. Huh.
That'll have to be
All
something
right.
to look into.
Yeah, I'll check that out.
Anyway.
Cool.
All right. Appreciate you. Have a good weekend.
All right, buddy. You too. We'll see you later.
All right. We'll talk to you soon.
All right. Bye.